Hi, I'm Lisa Leiter. In Chicago Business Today, the collapse that never came. 2 years ago, many people were calling for a commercial real estate crisis so bad it would threaten any economic recovery. But now that loan delinquencies are falling, property values are rising, and leasing is picking up, those doomsayers are proving wrong. Chicago is clearly avoiding a devastating crash like that, and industry veterans say the city has seen the worst of the downturn. I recently sat down with Bruce Cohen, chief executive of real estate investment firm Wrightwood Capital, to talk more about the state of the market. Bruce, thanks for joining us. Last year, there were calls for a collapse in the commercial real estate market, a tsunami, a tidal wave, whatever you want to say, of foreclosures. Is this the crisis that never came, both nationwide and here in Chicago?
Yeah, I think we've been calling for some time this, quote, tsunami of debt maturities, Y2K. The crisis that everybody talks about, but a crisis we always thought would play through. And indeed, that's what we're seeing taking place right now. What the lending community needed to do was to allow the industry to heal, both in terms of property fundamentals and in terms of the restoration of capital flows. Both of those things are happening. Recovery is much stronger. Values have gotten back to a point where people thought it would take much longer. And as a consequence, the crisis per se is not as dramatic as perhaps people were expecting.
Well, one indicator that, the market is starting to recover, that local commercial mortgage-backed securities, the delinquencies on those securities have fallen now for a few months. Does that really mean that the worst of the real estate distress is behind Chicago?
The entire industry is having to work through the fact that most properties aren't worth their debt. And so as a consequence, what the lenders are doing is working with their borrowers either to give them time to stabilize the property, but to ultimately migrate it to liquidity. And so the lenders are wanting to get repaid, and they're doing so either by modifying and giving a little bit more time, or they're doing so by ultimately driving the borrower, inducing the borrower to sell the asset, even if the ultimate proceeds are less than their debt.
And what would you say then are the biggest challenges to the market going forward? What could thwart any kind of recovery?
Rising interest rates that don't have a corresponding reflection of improvement in property fundamentals would adversely affect the industry, and obviously an exogenous shock to the economy that induces people to be unable to take risk. That would affect real estate as it does all other asset classes.
Okay. A lot of vulture investors thought that this recent downturn would be the opportunity of a lifetime. Was it for them?
No. And it was because they assumed wrongly that they were the only game in town. So a benign regulatory environment, banks being reasonably resolute, and investors having expectations of getting extraordinary returns without taking any risk meant that nothing happened.
So what's happening now? Some markets, Washington, D.C., New York, have seen that tremendous rise in property values. Is Chicago better positioned for investors? In your judgment, are investors coming here to get a better yield?
That was the first step in any recovery. Capital migrates to safety. Once people feel it's safe to go back into the water, they start to say, I'd like to get a little bit more yield. And so it isn't as if Chicago is deemed to be an inferior marketplace. There are assets that will trade well here.
Look at some of the deals that have gotten done recently.
No question about it. And so capital will flow here. But we don't have the type of demand growth that the investors see on the coast.
What was your aha moment in the past year? When did you think to yourself, we're in a recovery?
The banking industry and the lending community drive our economy. And they certainly drive our industry. And them and the banks becoming more reconciled to their circumstances, feeling that they're in reasonably good health and that they are going to get through this and be back in business, that to us was an inflection point.
Okay. Well, Bruce, thanks so much for joining us today.
Thank you for inviting me.
And that's this edition of Chicago Business Today. For more on this story, be sure to check out this week's print edition of Crain's or chicagobusiness.com. Thanks for watching. We'll see you tomorrow.